Co-powered by Green Lamb Laminates, Gustakhi Saaf.
Hello and welcome to the Business Today show. I'm Udayan Mukherjee. My guest today on the show has worn so many entrepreneurial hats over his career. First, as the promoter of a really successful entertainment company, and then a producer of some of the edgiest and most successful movies in Bollywood, and more recently, as one of the significant investors in a very edgy Edtech company called upGrad. Gives me great pleasure to welcome on the show the one and only Ronnie Screwvala. Ronnie, great to see you again, and thanks for joining in today.
Thank you. Thanks for having me on the show. Go ahead.
Yeah, no, as I was introducing you, you've done so many things. I mean, in a 30, 40-year span. Tell me, do you have to do a mental reset every time you get into a different game, or do the basic rules of entrepreneurship and risk-taking apply to pretty much each of them?
I think the basic rules do apply very clearly. They get mature. Your gut gets a little bit more refined. Learning always helps. But there isn't a playbook. I see a lot of young people today talking about and using the word playbook in a very, very loose manner. And I think what I would like to say is there isn't a templated playbook. It's different things for different. It's just not for different sectors, just different way you approach things. Sometimes in a day, sometimes in a week, sometimes in a problem, sometimes in a sector, sometimes in consumers.
How have you matured, Ronnie, over time? Do you see yourself individually having changed during the course of the journey? Would you say you were probably more impetuous or hot-headed or impulsive even maybe 20 years ago than you are today?
I think I was more opportunistic 30 years ago. Then opportunistic as a word converts itself maybe into sizing up opportunities, which actually means that you're using a little bit more thoughtfulness to that. You look at more things like focus. You look at things of a little bit more long-term. When you're opportunistic, you look at things in a much more short-term manner. When you look at opportunities, I think you look at it in a much more longer-term manner. I think over a period of time, maturity doesn't come in just the way you handle people, handle situations, handle business, handle scale. I think it also talks about the value systems of what one goes through, why you do what you do, what turns you on, what's the long-term impact of what you want to do. So I think it's that mix and match that really takes your career path as you go forward. So one thing I'd like to say, because I think in your starting part you said, I see myself completely as a first-generation entrepreneur. I see myself as a doer. So I've never looked at myself with an investor hat on. Yes, media was my initial one, serendipitously. It's not like if somebody told me that I'm going to be an entrepreneur and I picked media as a career path. I just used to do as a hobby theater. I used to do front of camera hosting on, at that time, the only state-run Doordarshan channel. And serendipitously, that became something that I built as a career over 20 years. Today, when I look at the same thing and rebooting myself in education, and I'm not an investor in upGrad, it's pretty much what I did when I co-founded UTV as a media company. That same DNA comes in. You've got to roll back up your sleeves. And if you think any sense of entitlement that what was there, oh, I've already been there, done that, so why do I have to do all this again? That's going to be a bit of a letdown, because it is about rejigging, rebooting, restarting, relearning in many, many ways. And the third one, which for me is also a very special place in my heart, is our Swadesh Foundation, where I think it's matured me a lot, because when you look at things in a non-for-profit environment like we do with Swadesh Foundation, it kind of gives you a very holistic picture of how businesses could be built and need to be built.
It's interesting. You said two things here, Ronnie. You said that you don't look at things in an opportunistic way, as you may have in an earlier time, and you consider yourself an entrepreneur, not an investor, which brings me to the question of whether in today's avatar of Ronnie Screwvala, would you still have sold UTV and walked away, or do you sometimes regret that decision?
No, I don't regret that decision, and I would have done that because, firstly, I don't think any of us have choices in life that if you can look at this 10 years later and redecide, I don't think life gives you that luxury. But even if it does, I would say no. because my thought process and decision making to do what I did in 2012 doesn't change. And even if it looks better or worse in 2022, at that time in 2012, it was the right thing to do.
In each thing that you've done over the years, whether it's movies or whether it's UTV or with upGrad today, the one thing which leaps out is that you've got a risk taker's mindset. Would you say that's a fair assessment, that at heart you're a risk taker and you don't mind accepting failure if the risk does not pay off? Because it's something which a lot of Indian entrepreneurs are quite shy of. I mean, Indians are not really risk-prone people generally.
Yeah, the word risk, it just sounds very maverick and it just sounds a little bit more brash. So I'd like to put that into context. I think you did put that into context by using the other word, which is failure. So if the question is, am I a risk taker because I'm not scared of failure? Yes, I think I'm a risk taker. Over a period of time, I think your gut improves and your ability to size up what risks you're taking are important. Risks are about batting outside the wicket. Risks are about taking that last plunge and working hard to make it happen. Risk is not when you every time bet your enterprise, bet your family, bet your company, bet this. So just to be clear, risk is not binary. Risk is to be viewed in a very different manner. It's a decision-making process that's more at risk than the financial risk. That's the outcome of it.
Do you see greater risk appetite among the new generation today, Ronnie? Because, we've got a rash of unicorns which have been created over the last couple of years. And the kind of young entrepreneurs who are leading this, would you say that their mindset is quite different from the kind of entrepreneurs who are your peers who started the game maybe 30 years ago?
That's a very good question. And I'd like to say it in two ways. First, I think, no, I took a lot more risks when I didn't have any resources, didn't have a bank to give me a loan or private equity or angel capital to come our way. That was a different kind of a risk taking because it's all in. You're all in, you don't have a choice, and then you stay all in. And that actually is very strong. Now, cut to today, you're only reflecting risk with people who have got well funded, so to speak, or funded. But there's a lot of people who are actually all in. So to me, I break this up into the people who are all in are taking more risks than the people who just feel, oh, I got the money, I raised my money, so I can take more chances and risks. That's how I'd like to differentiate it, because that's when we really set the signal. I think that the message today for entrepreneurs is not about the 20 people who raised a certain amount of money, and that's a different story, but it's just how all in are you, And there I would say 30 years back, I was all in. What I'm doing today, I'm all in. Does everyone who's raised money from outside look at this? I think it's a mixed bag there, because it's about, okay, firstly, it's like, if I hadn't raised the money, I may not have even got into that business, which means you're not all in. The second one is, the conversation is about the next fundraise. And therefore, I question that ability, because of course that means you're into your business and you want to grow, but you're almost betting yourself on a binary outcome. And fundraising gives you this context that you think you can take higher risks, but if the outcomes are always binary, that if I don't raise the next round of funding, I'm shutting down, then I think you're a less risk taker and a foolish risk taker than many others who require a lot more credit for the risk they take.
So which of the two categories that you just outlined do you think the current crop of digital billionaires belong to? Do you question their ability to have sustainable business models in the absence of private equity capital? Do you think many of them are destined for failure?
If I had a gathering on a round table of the 30 or 40 alleged or nomenclature word of digital billionaires, I would say let's talk in 3 years, because the ground will shift, the ground will change substantially. Just because you raise money at a certain valuation does not necessarily mean that's sustainable. I think at least 60 to 70% of the people who've done that are going to have a big challenge as they go forward over the next 3 years to establish and justify those values. Don't forget, as a founder, you give almost what we call liq pref, right? A liquidation preference, which means that every stage when you pumped up the value, and pumped I'm using as a loose word, but pumped up the value, if you can't justify that at the end game, you could land up being from even a 20% investor to being a 2% shareholder in your company. So I think that the ground is going to move a lot. So I would not shake hands and hug today's digital billionaires, so to speak, and say you're going to be around for the next 3 to 4 years or 5 years. I'd rather take that call 5 years from now.
You know, it's interesting to say this, Ronnie, because
I know it sounds cryptic, but that's what I feel.
No, it's not cryptic at all. I'm completely in sync with what you're saying. In fact, I was just going to tell you that I heard a similar strain from, coincidentally, an Edtech player, Baiju Ravindran, a few months ago on this very show. He said there are companies in the digital space who don't have cash flows but are building great valuations. And there are companies in the Edtech space who have cash flows and profits to show off today, not 5 years out. Would you say that that is the kind of model which appeals to you in the upGrad investment that you've made, that the cash flows don't come 5 years later after you've burnt hundreds of crores? They are available even today.
So if it's specifically about education in the edtech sector around the world, I would like to say very clearly, it doesn't need that kind of money. This is not one of those sectors where the more money you have, the more you can burn and do whatever else. Yes, sometimes it goes into consolidation. Most times in education, marketing necessarily doesn't work. So the model has to be right from day one. The people who say, I'm going to do X, Y, Z, and then 5 years later, I'm going to figure out profitability, it's a very tough place to be, almost an impossible place to be. And half, I would blame the entrepreneurs, but more than that, the half, I blame the investors. Because the chant, when you're putting in that money is, okay, so what will it take to do this? What will it take to do that? It's not a game show. What will it take to that? There are no theoretical questions and answers. But it almost becomes like that. Okay, instead of $100 million, if I give $200 million, what will it take to do that? And then, similarly, just 9 months later, magically, those same people will say, okay, where's the profitability? So I think founders have to be rock sturdy that if they're only going to be lured into the valuation of the fundraising game without actually getting to what is the business I'm going to do, everyone else will be seen as fair weather friends getting on and off the boat. And I think when you look at failure there, most people think, oh, so what is a failure? You raised money and you got $1 billion valuation. Are you likely to fail? Failure's got multiple. The business may still continue. Could you be devalued? Yes. Is valuation going to be a failure if it's a lower part? Is the business model a failure? Is running out of money the failure? So you have to be very, very clear because you've upped the ante, you've upped the stakes. Now it's your responsibility, whether you're 30, 40, or 50 years age, to deal with that onerous part that comes with raising that kind of capital.
Given what you just said about Edtech, what do you think has the greater potential in this country, Edtech or Fintech? Because these two seem to be very broad categories where a lot of new enterprises are mushrooming. Some will survive, some will not. But broadly as themes, which do you think has greater potential?
See, I think it again depends on the benchmark. Both as total addressable markets are massive. I mean, a country like India, where we need to upskill so many people, where everyone who comes into the workforce is not ready for the workforce, where almost only 60% of the people don't even finish their undergraduation, but now need to, where a lot of people need to move from the arbitrage economy to what I would call the fourth industrial revolution or the IP economy, and learn to earn more. There's massive scope. The fintech is for a growing nation like this, we're going to transact digitally. So if you're crazy about the context of GMV and value and transaction value, then fintech will have its own. When it's really high impact and how a nation can actually become the second largest economy in the world, I think Edtech is going to play a much more role. And the last thing I would say is the wallet share, the mind share for spending of the consumer for education versus looking at fintech as an enabler. Here, it is going to be a much more, you'll pay for it, and you will pay for it because it's going to change your career and it's going to give you an ROI. In the fintech, you will use that more as a platform or as a transactional mode, which makes it more efficient. And therefore, finding that profitability in that sliver of a margin will have its own challenges.
We need to take a quick break at this point, but we shall return with Ronnie Screwvala in just a minute.
You are watching India Today.
Welcome back. You've been watching the Business Today show. I've been in conversation with Ronnie Screwvala. You made the distinction earlier in the show about being an entrepreneur versus an investor. How would you qualify your investment or engagement in Lenskart? Would you say that you're an entrepreneur looking at Lenskart, or you spotted a big market opportunity which you invested in with an entrepreneur of your choice?
Lenskart is purely an investment from where I sit. It's really backing an entrepreneur. So to me, the DNA is if I'm a co-founder and if I'm a co-founder, then I'm deeply involved with the company. I'm deeply curious and engaged with the founder of Lenskart. But there it would be, I may have 5 points of view and it's up to him to take one or none of the ideas. When I'm looking at the company as an executive chairman, I don't have the choice that says, I have 5 ideas, let's see if my team likes some of them. So it's a different sense of driving, and Lenskart is an investment.
Tell us about the movies bit. We've spoken a bit about Edtech and Lenskart and even UTV. But, RSVP, you keep saying it's a hobby of yours, but I can't help thinking that a very large part of your creative heart lies in that venture. Is there any financial motive at all in that, or does it exist only to satisfy some creative urges in you?
So now it definitely is only and solely as a hobby and a passion. It does not have any financial. I don't want to go out there and raise any money on it. And that's because personally, I feel doing repeat acts in life are very tricky and difficult. And I wouldn't want to do that. Second, I think having done that in media, and when you look at it as a business, almost 80% of what you decide is something that you have to do and 20% you want to do. The difference today in my being able to pick and tell the stories I want to tell is if I don't have a P&L accountability or having raised anyone's funding, everything that I greenlight is something that I want to do, not have to do. And that's quite liberating. Then it becomes a hobby. Then it becomes a very different sense of how you do that. So I want to treasure that moment of being able to want to do everything and not necessarily have to do it. And that's my clean-cut differentiator when it comes to storytelling. In terms of my creative buzz, yeah, I think it's unfinished business. I think at heart, I really enjoy that element of storytelling.
Just coming back to Edtech for a minute, while the sector has done incredibly well, there is also some chatter in the ecosystem about how some things are not going very well. Like, you hear about lots of complaints. Some people say online education is not quite delivering what it started out meaning to deliver. There's some talk about organizations folding up, etc. Do you think the ecosystem is really healthy, or maybe there are things which could change for the better?
When you're market making and creating something out of nothing, there'll always be some side reactions, I would say, and under no circumstances am I justifying them. Education is something where nobody has looked at to have a market. It's always been you have a brand and then you go to that. As a college has been there, or a university for 50 years. But for most people, education has been an event. It's scheduled. It's school and then it's college. Now, so there's 2 different parts. One, in the K-12 sector, it's very difficult to measure outcomes. It's soft. It's parents, their FOMO, their ability to say, am I giving my kids the best? So between the time you invest in something, and there may or may not be an outcome because it's difficult you may think the marketing approach is very different. When it comes to higher education, outcomes can be defined very sharply. Because if you put in to learn something, it needs to augment your career. You need to get a promotion, you need to get a shift of a job, you need to do that. Otherwise, so I think those fundamentals have been established. Second, overall education in universities has always been a very selective medium. Online is a much more eliminated medium. If there are 10,000 people who apply for a college, they'll select 200. In online, if 10,000 people apply, 9,000 will be given the opportunity, and 1,000 will be told differently. So the expectations at scale are something that people will need to align themselves to. I would not make that into a panic mode, but sure, if somebody is being aggressively marketing and overselling something, that doesn't do the industry well at all, because the first thing you need to do is be conservative in your approach. Now, if there are 100 startups in any sector and 2 fold up, I think that is something that would be much more founder-driven or company-driven or model-driven than labeling a sector, because I think in almost any and every sector, there'll always be some people that have started up something and it didn't work out, mostly because the model wasn't right in the first place or they ran out of funding.
A lot of young entrepreneurs find it quite difficult to deal with their first failures, Ronnie. Take us through your journey. I mean, which instances of where you might have started something and it didn't quite work out that way, and how important is it in the life of an entrepreneur to be able to accept and to deal with failure?
I think when we ask ourselves how important it is, almost like it sounds like we have a choice. I mean, there's no question about the fact that you're going to fail multiple times. Do I have recollections that are cathartic in the way when one failed, one felt this was the end of the world? Yeah, I think there would be. And with every failure, you've kind of digest that a little bit more. But I think that's where a little bit of the earlier point that I make is how all in are you? The problem of failure today is twofold. One is everyone is so fearful of the failure that 9 out of 10 times they're not even walking past the gate. The second one is when you're so fearful of failure and you let that comatose you, then it's really is the first time it's going to be a failure. So I think while people are very scared about saying, I might fail, there's a lot of pressure that goes with there also, right? There's a performance pressure. Your parents have told you, why don't you go get a job? And now you've stepped out in your career, or there's a different crossroad. It's not just always about raising funding. There's an incredible amount of media and social and perception pressure that, did you raise the right kind of funding? Because somebody else is doing that. So this constant pressure of performance in itself puts so much at stress in terms of failure, because otherwise your failures will be there. You did something wrong. But today the high profileness is what I think people are more concerned about than the actual part. It's no longer something that you can keep within and look at that. If I started something in a manufacturing operation, didn't work, it wouldn't be breaking news anywhere else. Today, people raise money, they get a headline, then they fold up, then they get a headline, and therefore it's a very public failure. And I think that's more spooky for a lot of people, but they don't have a choice, because if you stepped up and you're doing the PR and you want to be high profile, your ups will be high profile and your downs will be 3x more high profile.
That really does sound scary. But you've had a long career, Ronnie. Who are the people or peers, I should ask, who you have or hold in great regard or respect? And who are the business people you really admire in India?
Not to sound facetious, I think for me, it's not been any individual. And the reason I say that today is because, I think everyone is not who they seem to be. If somebody says, oh, I'm looking at you, Ronnie, and follow you, and I'm saying, look, you don't know everything about me. You can't take one facet and two facets and then say, I want to emulate yourself around myself. So I've been always a little cautious about this context, because everyone has got a different facets to them. So I would say different facets for different people in many ways. I think the Parsi community and some of the leaders we've had there, where you kind of look at, it's been inspirational for me, where you look at impact and you look at, the right value systems along with creating businesses at scale and being highly successful is one. The second one is where there's absolute raw ambition, where you will tear through everything else for market, for really being highly successful and creating that. And I think sometimes that stirs you up. Is that the best thing in isolation? No, but it stirs you up. So I think I'm a chapters guy. I'm not a whole book guy. I like to look at different facets of people and gleam on them to see what works for me. Because any one person to idealize today in the 21st century, I think is a little tricky and tough. Because what you see is not what you get, not because the other person is not that. It's because everyone is multifaceted.
Okay, you've provided me the perfect last question then. Give me a chapter that nobody knows in your book. I mean, what's the one thing that you would say nobody knows about Ronnie Screwvala?
I think there'd be a lot that they wouldn't. But I think people, I'm very reclusive by nature. I'm extremely reclusive by nature. I can be extremely thoughtful sometimes, though everyone may feel I'm being impetuous. And I actually do enjoy and thrive on the multiple impacts that one is creating. So I think for me, a lot of people look at that and look at time management, and that everyone feels, for example, that you you need to be super busy. And I think that's not the case. I think I enjoy different facets of life. So I guess that's what it would be. Not the most exciting last answer.
No, but it's been an exciting conversation, which I've enjoyed a lot, Ronnie, and I thank you very much for it. Great luck for the future, and thank you very much for your time today.
Thank you. Thanks for having me.
Amid the Russia-Ukraine crisis, Europe saw the world's biggest rise in arms imports in the past 5 years, a trend set to accelerate following recent rearmament commitments. How are arms traded across the world, and what is this industry's worth? International trade in conventional weapons is worth an estimated $100 billion annually. The industry's products range from light weapons to warships and military defense systems. Nearly 40% of arms exports originate in the United States, but Russia, France, China, and Germany are also major suppliers. Europe shows the strongest growth in trade, 19%, a trend that should consolidate with the new Russian threats. Widely accessible weapons cause suffering and destruction. A global treaty aimed at reducing the irresponsible transfer of conventional weapons came into force in December 2014. Its strict criteria controlling sales aims to ensure participating countries avoid breaking international embargoes and reduce the number of weapons used for genocide, war crimes, or terrorism. Many of the 130 signatory countries, including the US, have still not ratified the arms trade treaty, while Russia and China have not even signed it. The International Committee of the Red Cross says there is still a discrepancy between political commitments and the ease with which arms are transferred to actors who do not respect international law.
Presented by eBix Cash. हर खुशी के लिए काफी है. Co-presented by CoinDCX, your gateway to crypto. Co-powered by Green Lamb Laminates. Gustakhi Saaf.
Отойдите!
A huge disastrous scene over here. This is a city absolutely dead.
The Ukrainian military truck that was destroyed by our artillery.
Windows broken, shards of glass everywhere. These are unreal times for people of Golgotha. You're seeing new bricks because they're rebuilding. That's how resilient this town has been of Golgotha. I'm atop a T-64 Russian tank, and they are now preparing to roll in to the border areas, the front line.
You are watching India Today.
Good evening and welcome. I'm Pooja Shali. This is a special telecast about our neighboring nation.